Welcome to BQ Pram. I'm Hiral Dadia. A lot of stocks that are in focus in today's session. To discuss more, we have Avinash Gorakshakar, Head of Research at Profit Mart Securities, joining in. Welcome to the show, Avinash, and a pleasure to speak to you.
Yeah, good morning, Hiral.
Avinash, good morning. My first question coming to you is with regards to Tata Communication. The company reported earnings, and overall, if you see in terms of the numbers, clearly the overall, the net profit has remained flat. Revenues have seen an up move. And if you see in terms of the stock as well, the kind of lows it hit back then, say in June 2022, from 870, it's seen a good bounce back to levels of almost around 1330. Firstly, what do you make of the numbers? And secondly, at current levels, what would you advise an investor to do?
Hiral, I think you're right in saying the stock has moved up significantly, and I think the markets were expecting sort of a better performance, in fact, a significantly better performance. But if you see the operating EBITDA and the bottom line, I think these numbers compared to the December quarter of last year have been more or less been flattish. I think slight disappointment on the numbers in terms of margins. My sense is that this is a very unique business with a fair amount of scalability and good EBITDA margins. But I think in this quarter, probably the margin picture was not as per expectations of the market. So my sense is that investors can definitely look forward to buying the stock only on declines. Currently, the stock appears a little pricey and valuations don't seem to be cheap. So I think investors who have it can hold on, but fresh buying can be advised only on decline. So I think the stock has slightly run up ahead of expectations, and I think the results have been slightly disappointing. So I think you could expect a slight decline. At that point of time, probably one could dip in and accumulate it for a good medium to long term kind of.
Right, so that's with Tata Communication. Moving to a Poonawalla Fincorp. Again, if you see in this stock as well, a good set of numbers that have been reported. Profits are up around 88% at 150 crores, and income has gone up to almost 520 crores. And the kind of run the stock has seen from mid 2020 to now, it's clearly playing the rally in terms of what the real estate players have actually enjoyed. What do you make of the valuation and the earnings for this stock, Avinash?
Yeah, I think Herald, as far as the numbers are concerned, the company has performed well on all parameters, whether it is loan book growth, whether it is disbursements, whether it is asset quality. And I think the absolute profit number, as you rightly mentioned, has been significantly up on a YY basis. So I think numbers have been much ahead of what the street expected. But I think the stock has obviously been re-rated very fast. In fact, even today we have seen that stock has been up by almost 4 or 5%. So I think the markets are very happy on the kind of growth numbers which the company has presented. Normally, whenever we see such companies, the market pencil in a much higher kind of multiple for the growth. But looking at the long-term prospects and the kind of opportunity, I would suggest this is a stock which obviously one should look at buying on declines. I think at these levels, maybe the stock has run up slightly ahead of expectations. You could see a little bit of consolidation going forward, but we remain positive on the company. Our sense is that FY23 as well as FY24 should be significantly better. So to end it, I think it would be better if one can hold on and only buy on declines, not at the current levels.
Right, so buy on declines is the strategy on this one. Another stock from the infrastructure space that is in focus is the Dilip Buildcon. Now, Avinash, overall, when we listed, the hopes were really high in terms of a Dilip Buildcon from an infrastructure perspective, right? That space has been in focus. And in the last 1 year, the stock is down around 37%. I mean, from levels of 850, 900, it's gone down to 200, 220 already right now. Clearly, what's the story, do you think, with the Dilip Buildcon, and what should an investor do? Because yes, today it is up, but it's mainly on the back of the news that one of the JVs has been declared the lowest bidder for a 1950 odd crore project in Madhya Pradesh.
Yeah, I think Hiral, basically, I think Dilip Buildcon is one of those companies which will benefit significantly from new projects which are announced for both EPC as well as for infrastructure. I think they have a large order book, and as you rightly mentioned, the stock has corrected significantly. But I would believe that in the coming budget, hopefully, if infrastructure and EPC projects are given a boost, then I think from these levels, Dilip Buildcon definitely builds a positive case. There could be a good kind of rating on the stock provided the company executes its projects in time. And on the leverage side also, if the company does a little bit of deleveraging, because one of the reasons the stock has come down is because of the high leverage on the balance sheet. But definitely at these levels, the risk reward could appear good if you take a 12 to 18 month time frame. Because hopefully in the budget we could see a lot of announcements for infrastructure, for affordable housing, and manufacturing, which directly percolates down to construction EPC companies. So net, I think it's a good buy, but provided the investor has a slightly medium to long term.
Right. And overall, someone who was holding a Dilip Bitcoin at those high levels and is still waiting for that recovery, do you think they should start averaging out by buying at lower levels now?
I think definitely, because looking at the kind of price dip, the averaging also would work out in favor of the investors. But I think again, the point to be noted is that please keep a time frame of at least 12 to 18 months, because we could see the benefit of the entire cycle over the next, say, over the next 12 to 15 months. So I think averaging definitely would be advisable for investors who would prefer to wait and be patiently invested here, because obviously once numbers come in and order book increases, I think the markets would definitely like this, and that would obviously re-rate the stock.
Right. Moving on from the financial space, you have a JNK Bank which reported numbers. If you see the profits, they've jumped to almost 312 crores. What would you advise an investor to do with a JNK Bank?
Yeah, I think in J&K Bank, Hiral, what is interesting is for the previous 2 quarters, they have got the benefit of write back of provisions which they had provided earlier. Plus, on all parameters, if you see the loan book growth, the asset quality, the disbursements, I think definitely the banking sector growth which we have seen in the form of the credit growth is actually impacting positively even the smaller banks like J&K Bank. So my sense is that even at these levels, there could be good accumulation, and somebody who's got a 12 to 15-month horizon can obviously look at accumulating the stock, because my sense is that the March quarter and the financial year FY24 should also be a good recovery year. And to that extent, if asset quality is under control, we could see higher levels in the coming few quarters.
Right. So that's with JNK Bank. From the cement space, you have a Sagar Cement which reported numbers. It opened lower, but you are seeing some bit of a mild recovery that's coming in from the day's lowest levels. And overall, the space has been in focus as well, again, ahead of the budget. Yesterday's session, there was a lot of movement happening in cement companies. What would your view be? Because clearly the losses have widened. In fact, they've reported a loss in the third quarter versus a profit, and the margins have seen a major dip by almost over 500 basis points.
Yeah, I think what happened in the September quarter, Hiral, is more or less repeated in the December quarter. September quarter was very bad for the overall cement sector. My sense is that raw material cost inputs have actually impacted the operating EBITDA margins. In fact, not only Sagar Cement but even frontline companies like Ultratech reported a very sharp drop in profitability. So my sense is that hopefully the budget, if it announces a big kind of package for infrastructure, capital goods, cement is the first building block which is required in building infrastructure. So I think obviously cement prices have started moving up, raw material prices have started easing. So if you take a 12-month horizon, then I think cement definitely looks interesting. And I think if you look at Sagar Cement, or if you look at the larger players like Ultratech or Heidelberg Cement, I think there could be a good risk reward opportunity provided you given a little more time. The third quarter numbers are definitely disappointing, and I think investors would have to wait for at least 6 to 12 months to get some decent risk reward here. But yes, from a longer term perspective, cement can be accumulated in a smaller quantity, but the time frame should be reasonably medium to long term.
Right. Apart from that, the IT pack has been in focus. In fact, for the sector as a whole, the numbers have been way above what the street was estimating, specifically not only for the third quarter, but even in terms of the demand scenario and the commentary that has come in from the managements. If you see Zensar Technologies, the stock is up, the profits have grown sequentially, but overall, if you see, there has been some bit of weakness, which is clearly not mirroring the way the stock has been performing today. What would your view be on a Zensar Technologies, and what would you advise an investor to do? Do you think the valuations are right to enter an IT stock, or do you think you should still wait for another quarter or so to understand the management commentary in terms of the demand scenario, the deal sizes, tenures, etc.?
Yeah, I think Hiral, you have been right. Zensar Technologies on a sequential basis has shown a very strong set of numbers. I think very surprising. But one thing is very clear that the Jan to March quarter is supposed to be the most busiest quarter, and I think in this quarter the kind of deal wins they enjoy, the kind of headwinds which are coming in from US and Europe are obviously going to impact the growth. So I would believe that it's better to at least remain cautious for at least a quarter or two, because as of now nothing has changed on the ground as far as US and Europe is concerned. And
Hmm.
that extent, I think I would believe that investors who are having positions there can hold on. Definitely in the near term, with such good numbers, the stock would obviously see a good bounce. But longer term, I think obviously the growth number is going to be under a cloud. So I would believe it's better to wait for a quarter or two and then take a call, because that would give you more clarity, as far as the full year FY24 earnings number are concerned. The markets are obviously happy that numbers are better than expectation, but what is important is the Jan to March quarter is the most important quarter, and if that does not turn out to be good, then I think you could see a further sell-off, in these companies.
Right. And moving on in terms of the pharma space, you have Syngene, which has reported numbers as well. A marginal uptick that we've seen in terms of profitability. However, numbers have missed the street estimates and the margins have been under pressure. Though recently we have seen a certain number of upgrades that have come in on the stock, what would you advise an investor to do? Because there has not been much movement in terms of the counter in the last 1 year.
See, I think Syngene, is basically a contract research company, and I think their trajectory is dependent on the kind of execution of projects which their customer companies do. So I think you're right. This quarter has not been a great quarter. It's a big mixed set of numbers. EBITDA margins have also come under pressure, although the profit in absolute terms is slightly higher. I think what the market would obviously wait, Hiral, is the kind of growth opportunity in terms of the contract research business, in terms of new client additions, and that unlikely is going to happen at least for the quarter or two. So I think you could find that this stock may just remain range bound for a long time. No big bang surprises, at least in the very near term. But yes, from a longer term perspective, if the stock corrects, then I think it gives you a good entry point, because this is a niche business and which has got a very good scalable opportunity. But in the near term, I wouldn't be surprised the stock could underperform.
Right. And overall, they're planning to start commercializing the Bangalore plant as well, where they will be supplying to Zoetis, which is the animal health company. The expectation was that it would be in the third quarter or from FY24 onwards. Do you think that could act as a positive trigger for the stock from here on?
Yeah, exactly. But I think the markets would await some clarity here, because
Hmm.
obviously the commissioning date and the commercialization of operations are very crucial kind of data points. So I think probably the March quarter or maybe the June quarter could be time when this news flow could come in, and at that point of time one could see a reasonable uptick on the stock. But till that time, Hiral, it's going to be extremely range bound, because other operating parameters indicate that the stock is not going to go anywhere. So probably it could remain range bound in the very near term.
Right. So that's the story coming in with regards to Syngene and all the movers and shakers in trade today. Thank you, Avinash, so much for joining us on the show. Pleasure to speak to you and get your insights. And thank you, viewers, as well.